Hey traders, welcome to a crypto market and global macro update. We're going to be looking at a bunch of different assets today, but the main focus is the risk on assets that we're seeing are potentially going to be breaking out here, with the S&P on the bottom right hand side being a potential market leader, not just in terms of a particular asset, but in terms of the overall financial markets here. I value entire market as just one big giant series of gears in some sense, where there's always going to be some correlations with some assets. So looking at the S&P at the bottom right hand corner, we do see that this right shoulder has broken out above this key zone. So now we have invalidated this head and shoulders. It was in my opinion, a confirmed head and shoulders where you see a break of the neckline, which was around, let's say, just above $3,300, moved to the downside, did not make the target, which was created from the head to the neckline. So then there was sellers in the market that were definitely in a trade that got in red, and definitely lost some money when it broke that right shoulder. So we got a break to the upside. Definitely going to expect some level of a pullback in my opinion, but overall the momentum I think is going to continue further upwards, because this has been a fake out. There are short sellers in this trade who are now getting squeezed out because they're losing money. They may have to hedge or just take out the trade altogether, which would mean that they would have to buy back the shares that they borrowed, which means that they would have to increase the level of demand in the market. So moving on to BTC, looking at the correlations, we do still see positive correlation between Bitcoin, which is a risk-on asset, and the S&P, which is also a risk-on asset. So overall, this was the major level of resistance, which is now holding as a support zone, level of confluence, descending zone, as well as a horizontal zone, previous level of resistance, which is now acting as a new level of support. We did see a potential descending level of support right there, creating our descending wedge, but I still value this as a descending triangle with a support zone right around that $10,000 level, and we see a series of lower highs that's squeezing the price, contracting the volatility, and we're going to see an impulsive move here, and I think we're going to be seeing that very shortly. We see that the price is pushing up against that previous 11K resistance right there, and what we're looking for is a potential break of that zone, where you see also that was a previous level of support. So I think once we break above that 11K zone, we're going to continue to move to the upside. So that's going to be the overall plan. If we do get a little bit of a dip, this previous high is going to be the next level of support. We may get a wick down to 10K, but overall, I think if we're able to break above the 11K zone, we're going to continue the overall bullishness to the upside. Because if we look back at, let's say, the weekly chart, we still broke that major triangle right there, and then the support was way down there. That was the major descending level of resistance that we were unable to break above. This break above 10K with the level of confluence of this key level of support was a major significant zone that we had to break. And in my opinion, that's going to be a pullback to confirm that yes, that is that previous resistance, which is acting as a new level of support, and we're going to get the next impulsive push to the upside. The S&P does look bullish to me as well, because we broke the head and shoulders, which was here. We at least should have hit the target right here. We did not. The buyers came very aggressively back into the market, broke the previous right shoulder, which is invalidating the head and shoulders, which is going to leave a lot of short sellers worried, fearful, and potentially selling or hedging. So last thing we're going to be looking at is actually, let's just take this off after Ethereum, because we will look at ChainLink. Maybe not Dash because it's not looking great, but I do think ChainLink looks pretty solid. So let's look at Ethereum. So not perfectly ideal. We see a support right there, which turned into our first resistance, second, and then third right here. So that's a descending resistance that, in my opinion, is a valid zone. And then we see the $300 zone, let's say just over $300, 307. Previous level of support, previous level of support, previous level of support. So that's going to be our descending zone, and then our horizontal zone, creating a descending triangle formation, and that's contracting the volatility after the major break of above the $300 level. That's a major level that we broke, is $300. Look back at the previous time frame on the monthly. It's a significant key zone. So the fact that we broke above makes sense that we're going to get a corrective move after the impulsive move, contracting in the volatility. This is a price action pattern that we have a structure that we can trade in, so we are looking at the daily time frame, but overall that's going to be the analysis for these two assets. So let's go on to a smaller time frame to see what first BTC is looking at. We will look at ChainLink, but let's initially look at what Bitcoin is doing here. And let's just increase the volume a little bit. And let's move to a 4-hour chart. So this is that main zone, that 11.1. I would say 11K would be definitely something that we want to go over before we look for opportunities, but that's going to be the major level, is let's say around 11.2. We do see a minor level that the price did break, which is a previous level of resistance. We see 1, 2, 3, and if we take that back a little bit more, we see that was a previous resistance and level of support if we really want to take it all the way back that far. But overall, that's going to be the potential zone that we could see. That's going to be range bound for a little bit. Overall, what we're looking for is something along the lines of this. So let's go and get the bars pattern. Obviously, I don't know exactly if we're going to get something like this, but we want to start to see a very trending market. We saw a first very strong impulsive push, which I think could be an impulsive push right here. And then we're getting a consolidation, and we want to start to see this, where you start to see strong impulsive pushes breaking very strong levels of resistance and holding them as new levels of support. And once you see that market structure change, this is the start of an impulsive push after a long contraction. We started this back in July, really, if you really want to start, or August if you're really looking at the previous high, but that was that last major impulsive push. We got a not so significant high above that previous high, which is still a market structure making higher highs and higher lows, because we did see that nice ascending level of support. We broke it, had a pretty good spill, but now we are getting a potential squeeze where, let's just draw in the level of support right here, like so. We see that it was first validated at this zone, and then second, if we take this away, right here, third, fourth, very valid zone, very solid symmetrical triangle formation. I'm gonna get some water here. And this is all we are looking for. A potential break above 11.2, I would say definitely is an opportunity where we would be looking to long BTC with some leverage here. Not looking at investments, or not talking about investments, although I am always looking at investments, but definitely going to be looking at some leveraged opportunities if we do break this zone, because I think that this is looking very similar to what we saw back in the summer of 2019, where we saw that very strong push from BTC after breaking the $4,200 level of resistance right around here. So this was that key 42 level $100 right here, 4,200 right around there was a major level of resistance. Once we broke above it, initially we had an extremely strong push, consolidation, another impulse push, and then we saw this. We saw a symmetrical triangle with a very significant aggressive ascending trend line that was used as a support zone. The price fell a little bit, had a little consolidation, and then had a really strong sell-off that basically brought it to its previous major low, which if it didn't hold that, you'd be really worried, because there's a lot of buy pressure there, but that's going to be the final zone before you're basically getting back to the $4,200 level. So maybe this level, the $5,600 level. But overall, we were definitely a little bit worried at that point. But then what did you see? You saw a descending zone like so, right? And then you see a ascending zone. And this is probably kind of what you're looking for, is a series of higher lows, breaking key levels of resistance, is holding those strong levels of support, and then continuing the overall momentum to the upside. So that's going to be BTC. We're looking for around 11.9 or 11.19 or 11.2 to break. And once you see that break, we are looking for a potential entry, and then using that previous major structure for a stop loss. And then your target initially would be the size of this symmetrical triangle, but then you'd also be looking at longer targets because this is such a key zone within the market structure. If you're looking at the weekly chart, because this 9.2, 9.3, this descending red zone is that major level of resistance that is creating a symmetrical triangle that's shown on the weekly chart, which is obviously one of the largest time frames that you want to be looking at as major key points for the market. So let's continue on with this arrow. So we're using geometry. We could go from here, and that's the more conservative approach. So let's initially go from the more conservative approach. Go from the breakout. So then you're looking at around 13.6 as the potential zone of a target, and this is the little bit more aggressive approach. If you're looking at the market, would be around 14.6. So those would be the two targets. And if we're looking at the weekly chart, let's just see if they align with any of the potential zones. If we're looking at the top of this previous high right there, where there was a lot of sell pressure, we see that that first target of around 13.5 is pretty close to that, and it was a previous level of support right here back in December of 2017, which is great to see. And then that next level of resistance is not too significant. I would say it almost makes sense to go to that next major level of resistance right there, which is around 15.8, just because we can see on the weekly chart very impulsive push to the upside, breaking the previous resistance, which is this resistance as well as the horizontal level of resistance, which is now acting as a new level of support. And we're getting that turn, we're getting that impulsive push to potentially get the bulls to have the first real strong push out of this symmetrical triangle. And then if we're really looking at longer term targets, because this did break out, we could go and look at that zone and look at the breakout, and that's going to be around 30K for the more aggressive approach. And then we'll be looking at, let's say, the 28.5K-ish zone for the more conservative approach for the longer term time frame trade for this breakout. So in my personal opinion, it does look like it's holding. 10K zone is a great opportunity. And if we're looking at the smaller time frames, in my opinion, we are breaking out. We just want to see that confirmation breaking that major level of significance, 11.2, somewhere around there. And then we're looking for a continuation like we saw in the previous zones, something like that, where you see aggressive pushes and massive impulsive pushes. You will get pullbacks. You have to be patient. But that is what we're going to be looking for. Now on to Link. So let's close this off. Overall, I think the crypto market does look more bullish. We'll look at some alts, but the S&P is doing really well. Gold and silver looks like it's doing pretty well. We'll touch on those as well at the maybe later half of the video. So let's just look at where Link is and where Link has been before, because it's been pretty unbelievable. It's at $10, but it was at $18 not too long ago. Let's put it on auto. Let's put it on weekly, and let's go to log. I'll get some water, and we'll continue on with the price action. All right. So it made a series of higher highs and higher lows. But then once we broke around $4.50, we absolutely exploded to the upside, making an extremely impulsive push to around $9, let's say, yeah, just under $9. And then we made another impulsive push to almost $19, so more than doubled. Pretty unbelievable. And then we got a very strong but pretty mild pullback in terms of the aggressiveness because we didn't see any massive sell-offs. It was just a series of lower lows and lower highs that we can use a trend line to connect them. And if we look on a smaller time frame, it is forming a descending triangle, which is a contraction in the volatility that we can potentially use to trade to the upside. And that's going to be what we're going to be looking at in this short little segment here. So let's now go on to the daily chart. All we really need to understand is this $6.70 zone was a previous resistance key level of maybe around, let's say, $5 right there, but this zone right here was a major level, and we're looking for a pullback, and this is that pullback. There was a lot of hesitation on the way up at around this zone, which is now going to be used as, again, a level of support. When we're on the daily, we can now connect the series of lower highs. If we just use the wick high right here at the very top, which is our anchor, we'll use the bodies of the candle for the second validation right there, and then we'll use that third validation, which in my opinion we have not broken yet because we have not broken the major recent significant high, which we need to in order to validate the market structure to change from a downtrend to a consolidation to then an uptrend. So let's make that red. And let's use this rectangle zone. And then we see this very strong level of resistance and support right there. Strong level of support initially turned into resistance. And that's going to be the major level that we do want to see break. Because what we could see, let's just take a picture of this, is a potential situation where if we think it broke this zone, but then we're unable to pass this major level of support and this major level of resistance, we could continue to trend, and this could be a level of support. But unless we start to see the upward movement, I don't really want to be looking to enter. I'd rather wait for confirmation where we're going to get a strong impulsive push that's going to break the major level of sensitivity, which was this around 11 zone, which is also a psychological zone. Above $10 is great, which is a better zone than 11 in terms of psychological areas because it turns into two whole numbers instead of just, or two numbers instead of one. But that's going to be what we're going to be looking for, is a strong break to the upside. We could be seeing a pullback maybe to this zone right here if it's a very aggressive impulsive push. We don't exactly know, but we don't want to enter too early because BTC has not broken out yet. Ethereum has not broken out yet. The S&P hasn't validated the head and shoulders, which is a confirmation that risk on assets are going to be potentially moving to the upside, but it's still very early on in the process of that confirmation. So I want to be a little bit cautious, but Link does look like a potential opportunity we could be looking for some price appreciation in short. It's done very well in the past, and overall, I think that it will continue to do well in the future. Now, looking at the DXY, which is the US dollar index, this is actually very significant because we do see, this is also the FX market to the right, but we do see within the US dollar index a very significant drop, which is indicating that the risk on basically speculative environment is going to continue. If a lot of people were putting money in the US dollar and selling other assets like stocks, crypto, all that stuff, this asset, the US dollar, would be increasing because in order to sell stocks or real estate, for example, where do you put it in? You put it in the United States dollar for a lot of the world, especially the United States, which is obviously a major player in terms of countries. But looking at the US dollar, it's again plummeting, which is indicating to me that the potential for the risk on environment will continue. Bitcoin's going up, Ethereum's going up, a lot of alts are going to go up, gold's going to go up, silver is going to go up, stocks are going to continue to go up, and that's going to be my overall thesis. I think that's going to continue, and we're just looking for opportunities. So that's going to be my overall global macro and crypto market update. Let's just take these off. I do think that looking at different assets does give you a lot better understanding of where the market's going, especially when you see something like a massive plummet in the US dollar, where you see a break in that major level of resistance, which should be now a new level of support, which is now failing, breaking to the downside, creating a potentially lower low than this low, which would be very significant, because then at that point we could be touching this descending trend line. So then that's a major significant downtrend right there. So then I think Bitcoin will be doing very well at that time. Ethereum will be doing extremely well, and other crypto assets that we will be looking at, like Link, I think will be doing awesome. So I think the opportunities will be coming in the winter, and we're going to get ready, and definitely stay tuned for many more global macro and crypto market updates. If you like this one, definitely give it a thumbs up and subscribe for more, so we know we should continue to make more videos like this. Until next time, traders, have a good one.